Thanks. Well, look, I came tonight to talk about this deal we announced this morning, which I'm going to focus on right now. But I thought maybe just a couple of words on Coro Energy, because I appreciate most of you probably don't know who we are, what we do, what we're trying to achieve. Coro is a small cap E&P company. We actually have production in Italy. We're a gas producer in the Po Valley, so we generate cash flow there. We have a small team. We operate. We've developed gas fields. We drill wells. All that kind of stuff, but actually the growth in the company is going to come from Southeast Asia. So in the last year, since I've been with the company, we've been focused on building a portfolio of assets in Asia, really looking for gas assets that are focused on supplying gas to the domestic markets of Southeast Asia, which is a very good, strong market story. So I can talk a little bit about that. Last time I was here to do a presentation like this, we were just doing a deal in East Java for a field called Bulu, which is a gas field that's going to supply the East Java gas market. It's a booming market, very strong. And we got into a position of resources in the ground to be developed with strong gas prices. We then have got a small asset in Malaysia. So we've got a study going with Petronas right now for a block offshore Sarawak. Again, big gas resource potential. That one's in the exploration end of the spectrum. I'm not really going to talk about that today, because we're quite early on that, but it does look very exciting. But today is our latest deal, which is in the West Natuna area. I'm going to show you on a map, but we're offshore in about 90 meters of water in the West Natuna Basin. And it's a very well-known basin in Indonesia. It's quite a mature basin. So some companies that you may be familiar with have been producing gas and oil in that basin and selling that, particularly Premier Oil is one that's well known in London. So I'm going to talk a little bit about the West Natuna and some of my involvement there. So the PSC we're coming into today is called Doyong. It's production sharing contract offshore Indonesia. And what are we doing? We are acquiring a 15% interest in the PSC. It's a high quality asset and it's in a very good address. So it's a well-known basin in Southeast Asia. It's got a near-term drilling activity. Although it's a gas field, we're going to be drilling some appraisal and exploration wells this summer. And so this transaction is all about funding that drilling activity and, of course, getting into the resource itself. So I'm going to show you what the field looks like and what the upside looks like. And the other thing I like about this asset is it's close to infrastructure. So we're very close to a pipeline system which can get into the Singapore market, which, if you want to sell gas in Southeast Asia, the market you want to be targeting is Singapore because it pays the most for its gas. So where is the, the asset? Here's Sumatra. Here's the southern end of Malaysia. Singapore Island sits down here. And we're up here in the West Natuna Sea. And here's the pipeline system that gets into the Singapore market. So this is where the Doyong PSC is located. The field itself, so it's the Mako field. So there's a lot of names flying around here. I apologize for that. But the gas field is called the Mako field. And it's in the Doyong contract. The PSC is called Doyong. So the Mako field is the discovered resource that sits there right now. And it is a huge anticline. It's about 350 square kilometers above the gas-water contact, which is a massive, massive area. It's about the size of, if you took the north and south circular around London, that's about that same sort of area. So it's a big, big aerial extent, and it's quite shallow. The reservoirs here are only at 400 meters depth, which is extremely shallow for conventional oil and gas. However, it's been worked on by Gappy Klein. We have independent resource certification, and we see this as being a very low-risk asset. I'll show you why when we look at the seismic across it. But it's got a number of wells drilled into it. And of course, as I say, it's only 16 kilometers from a tie-in point that's going to get us into that pipeline to the Singapore market. And the gas quality is good. It's 97% methane. We don't have any nasties in the gas. And there's already a heads of agreement in place with a buyer in Singapore for the gas itself. So the commercial aspects of this asset are extremely attractive. What we're doing, we are paying the vendors, to the people who have the license right now, a little bit of cash and some Coro shares. And then we're putting cash into the ground. So we're funding the next phase of drilling or partially funding, up to $10.5 million. And that's another thing I like about this deal, is not only is it a nice, safe asset with lots of upside, as I'm going to show you, but the consideration is going into the ground. And I think when you're doing deals in oil and gas, I much prefer to do that rather than write checks to other people. It values the asset at about $91.5 million gross. So that's if 100% of this asset would be valued at that. And as you'll see, there's quite a lot of gas here going into the Singapore market. We're funding it through issuing a Eurobond that's being underwritten by some of our cornerstone investors. And that's going to provide around $25 million of capital. And the attractions of this for us is that it allows us to drill these wells, to do this deal without having to come to shareholders for capital. Clearly, you know, share prices being where they are, we'd see it as being very dilutive to raise straight equity right now for our existing investors. So this is a mechanism to allow us to get hold of assets, build a portfolio, get exposure to near-term drilling. We can increase resources, add some value with the gas sales without having to come to shareholders for capital to do that. Now, you know, the bonds have warrants attached, but the warrants are at 4p a share, and today we're 2.3, 2.4. So we've got an awful lot of headroom to go before they would come into play. In terms of what it adds to Coro, you can see, we started with our Italian business at about 32 BCF of reserve and resource. But after this deal, we're going to be up at about 227 BCF in terms of reserves and resources. So we're starting to make some quite big steps after these deals. And production, when these come on stream, we'll be doing somewhere between 43 to 48 million standard cubic feet a day, which is, you know, that's kind of like a mid-cap. That's a mid-cap level of production that we'll be looking at once we get these assets up and running. So these are, I would characterize these assets as being grown-up assets. You know, this isn't a typical E&P with an exploration bent to it asset. This is a serious asset. These are serious gas fields that we're building into the portfolio. So let's have a quick look at the field itself and why we find it so interesting. Here's a map of this structure. So this is around 16 kilometers across. It's about 40 kilometers long. It's a big elongate anticline, very shallow, as I said before. It stands out on seismic. It's very obvious. And what I like to say about this asset, it's been hiding in plain sight. So this is quite a mature basin, and it's very unusual to see a field that's not developed of this kind of size. So here are the resource numbers. It's about 276 BCF in a 2C sense. This is contingent resource, which is fairly substantial, with an upside up to about 390, almost 400 BCF. Now, in a mature basin, why on the end of a gas pipeline, why would you have that gas sitting there that's not yet developed? Well, one of the reasons is this has been long recognized by the industry as being a gas accumulation, but historically it was viewed as being a drilling hazard. So the industry has been drilling up in this basin, and these wells here, these two there and this one up here, were drilled quite a number of years ago, really by companies looking for oil underneath this feature. And I know this because I was actually the geophysicist on that well there. The Chakalang one was my well. And we were aware that there was gas here at shallow depths. But we tried to protect the well from the gas. We didn't want any HSE hazards. And so, you know, we purposely designed the well to try and minimize any interaction with this level, to have a look at what was down underneath it. So it's not like the industry hasn't been aware of it, but I think the shallow depth of it, its great aerial extent, the unknowns about the reservoir itself, what the gas composition was, meant that the industry kind of put it to one side and viewed it as a hazard. That changed with the drilling of this well here, Mako South 1, which happened in 2017. And we might go to see what it was drilled on. Yeah, here we go. So it being so shallow, the seismic is very high resolution. So you can see the reservoir architecture very clearly, and the seismic lights up. You know, it's a gas-bearing sand. It has very strong amplitude response. So we know very clearly, we can see where the gas is present in this reservoir. The operator of the license today, Conrad Petroleum, drilled this well with the idea of testing the commercial viability of this reservoir. And it was quite a bold move, actually. And the good news for them was it was a stonking well. So they flow test, I think, 10.8 million scuffs a day. The reservoir was found to be very high quality. It was a nice intertidal sandstone, porosities of around 20%, permeabilities around 4 darcies. You'd expect that in a shallow reservoir. And the gas composition was found to be nice sweet gas. There were no nasties in it. So they had a very nice looking result. And with the extents of the field limits quite nicely defined, we've suddenly got a nice resource that we think can be commercialized to get into the Singapore market. Were they smoking something, thinking that this could be done? Actually, no, they're not, because Chevron has developed a lookalike fields. These are called the AB fields. They're offshore Netherlands, actually. But it's the same age reservoir, it's the same depth, similar gas. And they successfully developed these fields using horizontal drilling, which actually at a shallow reservoir is quite a feat, because you've got to get horizontal on it. But they haven't had any problem developing these AB fields. So, and these were discovered back in the 90s. So it's already been done. We're not pushing new technology. We're not reliant on new techniques. This kind of resource is being successfully developed around the world. In addition to that gas in the Mako field, which we're coming in, we will have 15% of that. We're also putting money into the ground to drill exploration. And this is a real attraction. When I was talking to Coro about the strategy for Southeast Asia, what I was really wanting to see was, I like exploration, I like near field or step out exploration, but if you can get into a gas resource and have the exploration as upside, that's fantastic. And so here we see some nice low-risk exploration. And why do I say it's low risk? Having been involved, by the way, in a dry hole earlier in my career, the Chakalang well, which was this feature here. Beneath the Mako field is where the main reservoir that produces in the West Natuna Basin sits. And this is where Premier and all those companies, Conoco, Chevron, etc., have been producing oil and gas from. And this is what we were drilling for earlier in my career. If we map beneath the Mako field, we see this ridge. We see one very proud structure up here, and we see some other closures north and south of that, which have been tested already and found to be dry at that level. So you might think, why bother drilling down deep to go and have a look? And the reason why we think it is worth doing that actually is because when we look at the amplitudes from this data set, we find around the closure nice brights. So the whole thing lights up. And of course, back in, I won't embarrass myself by telling you when this was, but it was, in the last century, we drilled this one. We didn't see any of that. So we don't see evidence for any brights on the dry holes, but on this closure here, we see the seismic lighting up quite nicely. And that is a real key differentiator. So this is why we say that this looks like quite an interesting prospect. We give it a chance of success of around 45%. And the mid-case size of this feature is about 250 BCF. That is the size of the field itself. So we'd be looking at doubling the size of the resource if this came in. And by the way, we would drill through the field to get to the prospect. So we can drill a well, keep it as a producer, deepen it to go and have a look to see if we can double the size of this resource, which is a nice add-on to have. It isn't the only bit of exploration that we have here. We also have some reservoirs above the main Mako reservoir itself. And so down here, we're at the southern end. We're sort of around, I don't know, Wimbledon as opposed to Haringey or whatever. But here, there's a little Horst feature that sits at the southern end of the field. And this is a cross-section through it. Here's the main Mako field. It lights up, as we know. And above it, we see two other intervals which also light up. And they are conformable with the structure itself. So here we have brightening on the seismic, up dip of a known gas field. This looks very, very low risk. And you'll notice that these existing wells are in other parts of the field. We don't have any wells down in the south. So we'd want to appraise the field down here. And here we can drill through the exploration prospects to get into the field proper. So again, why wouldn't you be looking to test these prospects and appraise the field at the same time? So that's the kind of exploration that very much appeals to me. And this could add another 100 BCF. That's the resource size we're talking about. And we'd say the chance of success is very high here. We'd give it 75%. It's not 100, but it's 75. That, in exploration terms, is sort of as low a risk as you're going to find. Here's the field, zooming down on where it sits. I told you it's quite a mature basin, and you can see all these other fields that have been in production. This is the Malay-Indonesian border. So we're into Malaysia over here. This is Indonesia over here. Here's Kakap was a big premier asset. Here's the nearest tie-in is here to these Medco fields, but this would go down into Singapore. So it's a well-developed piece of infrastructure. It's been around since the year 2000. It's operated by Conoco. There is ullage, i.e. there is space in the pipeline system to take your gas. It's open access. There's nothing to stop you putting your gas in there. And in Singapore, we have, as I mentioned, probably the best gas market in the region, with an HOA already signed with a buyer for gas here. So the group will be looking to firm up that heads of agreement into a fully termed gas sales agreement. This is an attempt to try and show you what is this worth. We're paying, on that deal that I showed you, we're paying around just shy of $15 million, about $14 million, principally by putting money into the ground for our 15% stake. But when we value that, actually we see this is worth somewhere around just shy of 50 to maybe $60 million. So now that's on an unrisked basis, and of course we're talking about a field appraisal and development that has got risk to it, absolutely. But we would see that when we get to this field developed, that this is going to be worth a lot of money. And just in terms of the metrics, we're paying about 34 cents an MMBTU for gas in the ground. It's going to cost around 90 cents to develop it. It's about $1.25 in terms of operating cost, but the gas price is 8 to 11. So it tells you there's a big margin here. Even if the government take is high, it doesn't matter. You're still going to be making a lot of money out of this resource. And at the moment, I think the opportunity for Coro is to be capturing these kind of highly value accretive positions in some of these assets, whilst the market is there to be had. So that's our objective here. So nice asset, safe asset. I don't think we're not going to be drilling dry holes on the field and getting nasty surprises. We can see where the gas is. We've got lots of nice exploration upside, and we'll be looking to drill this summer. I should have mentioned we're quite close to Singapore here. We're only a couple of days tow with a rig. If you ever fly into Singapore, you'll see lots of jackups stacked there. So they're warm stacked. There's plenty of them. The mobilization cost and demobilization cost is going to be quite low because we're so close. And normally that is the one cost in drilling that frightens companies is the demob would normally kill you. But this isn't going to be an issue here. We get access to the Singapore market, and we're doing this at exceptional value. We're going to be drilling, and we're not asking shareholders to fund it. So with that, I'm very happy to take questions. I'm sure you'll have lots of them.
Thank you, James. Hello, congratulations on the deal. It looks very good. I've two questions. The money you've raised and this drill, is that going to go into production very soon after?
No.
Okay.
No. In terms of production, I'd imagine it's probably going to be about at least another 24 months. What we have to do is firm up the gas sales agreement. Well, plan of development approval is the first thing. So the plan of development is in with the Indonesians. We'd expect that to be approved imminently. Then we have to get the gas sales agreement. That might take a bit longer, but that's okay. And at that point, we'll be able to move this from a resource into a reserve. So we'll be able to book reserves on the back of that. Then it becomes financeable. So that's the point at which we can start looking for bank finance for the development itself. And actually what we would do is put our other asset, Bulu, the one I talked about in East Java, in with that, and possibly anything else that we're picking up in this portfolio to help get the cost of financing the development down. Then you'll be into a full-on development. Now, we're only 15%, so actually development costs are not going to be big dollars, but it's this is something like a $250 million development gross for the whole thing. You know, we're only going to be a small slice of it, but you know, we'd be looking to debt finance that principally, and particularly with a gas offtake agreement for Singapore, the banks will be falling over themselves to help you with that. That's a valuable bit of paper.
Okay, thank you. One more. I'm not very familiar with these bond financing, but when I read it this morning, you're giving back 15% of the money straight away, and then another 7% back straight away, and then you're to investors, I believe, and then you're paying a 5% interest rate on it.
There's a 5% coupon on it.
So you're giving
we've got our finance director actually with us in the room. Maybe it would be better to talk about it because you can hear it from Andy, who's an expert on these matters. But Andy, do you want to comment?
Yes, so just to confirm, the debt was issued at 50% discount, so it does redeem the full principal value, €22.5 million. There is a fee payable. That fee is in relation to obviously arrangers, legals, and also in relation to distribution of the bonds. That has been subscribed for firmly half of the issue by London, who's our key institutional investor. And the balance has been underwritten by a new institutional investor, Pegasus Fund, who's domiciled in the Cayman Islands, who very well may also, as I say, distribute the bonds. They'll be fully listed on an exchange, so potentially investors could participate as well.
Am I right in saying that effectively 22% of the money you raised goes straight back in terms of fees and discounts?
In aggregate, yes.
James, you mentioned how shallow the reservoir is.
Yeah.
Does that mean you have to pressure up the gas into the pipeline?
Yeah, you'll be putting compression in, not straight away, but I think after a few years you'll need compression on there. Yeah, that's what we model.
If you're not in production and you're not generating cash flow, how do you honor the interest?
Yeah, yes. Well, actually, we're raising enough to be able to do that for at least the next 18 months. At which point we'll be looking to finance this.
Just to expand on that as well, you will note that the RNS that there's two tranches of Euro bonds. The tranche A Euro bonds will pay 5% coupon annually, which is referenced there as a cash pay. And the normal RBA tranche is the tranche B loan notes, which accrue interest and payment redemption. Obviously, it's sensitive to that point, make sure the company is capitalized with its objectives. They have to keep their risk on the table and have that through with the holiday payment at the end of the term.
Do we have any more questions at all? You keep me fit today.
You mentioned you're drilling in a high hazard area. What are the hazards?
Okay. Yeah, no, so I think there might have been a bit of confusion there. Historically, the Mako field, as we call it today, was viewed as a drilling hazard because it was shallow gas. And when you're drilling a well, you look for hazards like shallow gas because you don't want to unexpectedly hit a gas pocket when you're not prepared for it. So Mako was viewed as a hazard. Today, we don't view it as a hazard, we view it as a commercial resource. So the industry's view of it has changed. But no, we don't see this as a high drilling risk area at all.
Hi, James. Very quick question to do with the revenue from the Italian assets.
Yeah.
And I believe there's, in the future, there's plans to sell the Italian assets. Am I right?
I think it's fair to say that the incremental dollar we have, we'd rather put it in Southeast Asia than Italy.
Okay.
But at the moment, it is a revenue generating production base and you know, is bumping along quite happily. And of course, gas prices in Italy are looking quite good. So we're happy with the production that we're getting from that. Also, actually, as an operator,
yes,
it's a very good calling card to have around Asia, being an operator in Italy. You know, it shows that we're an operating E&P company. So when we're talking to Petronas, you know, and Pertamina and the regulator, actually, it's quite nice to be an operator and to be able to demonstrate that to people. So no, we're not in a massive hurry to sell Italy, but I think ultimately, yes, our future is here in Southeast Asia, not in Italy.
Okay, I know that's your main forte, Far East Asia. Okay, taking into account all that, the life of Coro, is it still develop and sell? the business?
I think what we're in at the moment is a portfolio build phase.
Okay.
So we want to construct a portfolio that will be self-financing, because we'll have production, some development. We like a little bit of step-out exploration of this style that I'm showing you here, that ultimately will fund itself and give returns to shareholders. When you've built that, typically there are other people who may want to own that rather than you. And at that point, you have a choice to make.
And will you be doing any investor trips?
Oh, yes. I'm sure we will.
Earlier on, you mentioned that you have invested in East Java.
Yes.
And how long and how successful is that? And then you invest another area. And how do you see in 5 years' time?
Yeah, the East Java, we got into a field in East Java called Bulu, which is offshore. Sorry, the contract's called Bulu, it's called the Lengo field. It's offshore. Again, it needs to be developed rather like the Mako field here. But we have a very strong gas market in East Java. So at the moment, we've had the plan of development approved for that. We're working with the regulator and the government about who is going to buy the gas. In East Java, there's a lot of demand for gas locally and very little supply. So you've got a number of people, whether they're aggregating gas along pipelines or petrochemical or power generation, all of them want it. And it's a matter of sorting out who the buyer is and what they're paid for. So that's the next step we'll make there. And then we've got to develop the field. So I'm hoping these will go in parallel and we can finance as a package. Banks much prefer to lend against a package of assets rather than individual ones.
We have time for another question. Andy, are you able to stay behind afterwards, or do you have to shoot? James doesn't shoot.
Great, yeah.
Okay. All right, thank you very much, James.
Thank you.